Hello. Today I'm with Gabriel Shaw from the Helios team, and this is a rather impromptu kind of live stream that we've decided to do to discuss the current state of the market. We're going through a difficult time at the moment. Everybody's kind of suffering in this ecosystem, and it's important to try and stay, emotionally stable and enthused. And a little reminder that everything we're about to discuss in this call is not financial advice. But as a VC, we like to keep our ears close to the ground. And one of the reasons we've chosen the ecosystems that we're involved in is due to what is now appearing to be more important than ever before, in that the development of core infrastructure and utility within the ecosystem of any ecosystem within the blockchain industry is fundamental. So we're feeling not as uncomfortable as some chains are right now, which we're going to be looking at. And I think it's just a great opportunity, and we'll see that over the next few months, for the ESIO networks to kind of continue building, continue to develop our infrastructure. So when it comes to the end of this downtrend and bear market, we'll be in a better position than we are in today. So talking about building, one of the reasons we're doing this live stream as well is because we're going to be launching a new series on YouTube, which is going to be called State of Crypto. And Gabriel, would you like to explain a little bit more about that?
Yes, love to. Despite all of the fear, uncertainty, and doubt that is in the market today, we as crypto veterans, many of you guys watching this kind of stream, will understand that we've been here before, right? And we're going to look at the charts, and we're going to look at fundamental analysis in terms of projects and the development of the ecosystem to try and blend the learning curve that newbie investors have to make, but also the experts and the advanced people as well, because we are all on the cutting edge, the frontier of things that have never been done before. Case in point, which we're going to look at today with the charts, is the Terra Luna ecosystem and the UST stablecoin that has just proven that it's not stable. So there's people who have been in the industry for 10 years, and they are now learning something new about our industry, our ecosystem. We're going to explore all of those things, going from beginner to pro, from institutional investor perspective to angel investor to crypto retail, chart trader, everything in between.
Yeah, so I'm really excited about that. And I'm not an expert at trading. I don't know how to make a short. I'm good at buying and selling, and that's about it. So I'm going to be on the journey with you all and learn as we go. And Gabriel has a lot of experience in these fields, so we can all learn together.
Yeah, and I will say I do have a lot of experience. I'm not doing this with Helios as a professional advisory kind of thing. We haven't put together extensive presentation notes and documentation. We're kind of going at this off the cuff, based on chart analysis, which I've got a lot of experience with, but this is still not like an official Helios advisory for how to think about trading. Definitely not financial advice, education and entertainment purposes only.
So where should we start, Gabriel?
So I'm going to share my screen, and we're going to jump over and start. So we'll start off with a quick rundown of some charts, and then we will look at some principles of trading, and then we'll see where the journey and the conversation takes us. I'm just going to share my screen right now.
And if anyone joining us, there it is. Yeah. If anyone joining us would like to join us either on the live stream or leave a comment, we'll make sure to respond.
Awesome. So yeah, Waxer, again, feel free to jump in with the questions. I'm going to try and not I want to try and talk fast, because people otherwise, everyone gets bored with slow moving videos. But there's certainly so much to try and juggle. So we might have to slow down, got to do some thinking. I want to make this as authentic as possible to demonstrate the kind of thinking process, at least that I go through, and share some of these trading principles. So there's like 2 slides for this whole thing, and we're going to spend most of the time actually over here in various charts and way beyond the typical technical analysis that everyone's familiar with on YouTube. We're actually going to do probably a much better job right off the bat than the majority of those channels. And I don't mind saying that, because I'm not impressed with most of the stuff that's on YouTube. So just in terms of principles, we are going to keep revisiting these as we do this series. We may extend them and refine them. I put these together based on previous materials and courses and programs that I've delivered and been a part of, learnt from and taught over the past 5-ish years. So we'll make use of these principles, and we'll go to look at the charts and try and make it actually visceral and practical for day-to-day use. Of course, we can't do a trading program without referring to the wolves of Wall Street. And this little analogy on the bottom right, these two wolves and a sheep, it reminds me, the markets, the financial markets are very much like politics. And some of you might not like this analogy, but it works for me. So there's a description of democracy, that democracy is like two wolves and a sheep deciding what to have for lunch, right? This is where the majority overpower the minority. The majority makes right in a democratic system. Unfortunately, usually, Waxy, you got some noise in the background.
Sorry.
And the sheep becomes the meal, right? And this is the same. This is the wolf of Wall Street. This is the analogy that's used. These people on Wall Street, and we can look at the UST, the lunar example that's happened just recently, and we can understand that it looks like it was an attack. It was certainly a manipulation by very sophisticated trading group or person that was able to create a situation where it broke the peg on the UST stablecoin, and they've probably profited to the tune of hundreds of millions. And there's quite a few theories in crypto Twitter and trying to piece that puzzle together. But they are wolves, and so therefore we cannot be the sheep. When we come to trade in the market, we have to develop the mentality to at least understand what the wolves are doing and use their strategies to our advantage so that we can actually profit out of this game rather than just being sheep to the slaughterhouse, right? So very interestingly, Waxer, you said that you're good at buying and selling, right?
Yes.
If you can do that, that's the entire point. The first principle is to buy low and sell high, right?
Yes.
If you can do that consistently, then you make money, and then there's nothing to worry about. You don't need any technical analysis. You don't need anything beyond what you've got if you can consistently do that, because that's where the profit comes from. That's the goal. That's the principle. So that's for long trading. You did mention not knowing how to short. We can get to that later as we progress with our series. But essentially there you're selling high. What you're actually doing is borrowing collateral money and therefore effectively selling what you don't have. And then you're buying it again when the price drops so that you repay what you've borrowed. And the difference between when you sell at a high price and buy back at a low price, you end up with the profit. So that's for short trading. But in principle, buying low and selling high is the name of the game. And everything that we do, fundamental analysis, looking at the teams and the projects and the roadmap and this, that, and the other. Same with stock. It's exactly the same in the stock market. We're looking at what do we think will have a higher price in the future than where we're currently buying it, right? That's principle number one. I guess maybe let's run through a little bit of this, but building your own strategy, don't trade what I'm going to show you, or as we go through the charts, I'm going to show you what I tend to do. And there's so much nuance to it. It's going to take a hell of a long time to actually convey all of the bits and pieces, not just one session that we're going to do now. But you've got to take responsibility. I feel like that should be there, right? Responsibility, to clarify what we mean here. You are responsible for your own gains and your own losses when trading. So you've got to build your own strategy, but don't make it up, right? You've got to, the trading is a game of reality. You can't just come up with a theory or learn a couple of things that you think are tricks and then try and repeat that, because you're going to get eaten by the wolves in the market. So you're making an investment. When you're trading, you're not just investing money, but you're investing a great deal of time to figure this stuff out as well. So that's principle number 2, is responsibility. Then let's just touch on this: patience and personality types. Choose your time horizon, and we're going to get into that probably today. The motion of the ocean. I just want to draw this analogy. What I'm going to show you just now, in just a couple of minutes on the charts, is this concept of time frames. So you can look at a 1-day chart, you can look at a 4-hour chart. Some people look at a 5-minute chart and try to trade using a 5-minute chart. It's a bit like trying to guess the direction of these two vehicles, right? You've got a jet ski and a yacht. Can you guess where the yacht might go? If you can see that there's if it's moving slowly moving forwards, it's not, the chances are it's not going to suddenly go off to the left, right? It can't veer off to the left too fast too quickly. The jet ski could end up in anywhere, any place on this in this photo within a few seconds. So when you're looking at a low time frame chart, and let's go and do that now. So we can jump down to a 3-minute chart and zoom in, and this is the action, the real-time action in the marketplace. And we don't know if this is going to go up or down. It's kind of trending down, so we might have an expectation it's going to go down, but it can reverse at any time. It can go in a different direction. And that's a 3-minute chart. And if we actually were a little bit patient, we took the time to watch that, we can see how the market moves, and you can look at it and try and predict, is this going to go up? Is this going to go down? And you're kind of gambling, right? And this is the low time frame. If we zoom up to a high time frame, the one that I like to use often is a 3-day time frame. Here, I can see a lot more the kind of the general momentum, and we're going to break it down and try and show you my thinking process. Hopefully it will help with your thinking processes. But we can see more of a graduated trend when we're looking at a higher time frame. So that's that analogy of the motion. And if I go back to the principles page, that is the motion of the ocean. And we will keep revisiting that concept. The others, composite man theory, the Wall Street cheat sheet. Some of you will already know that. We'll look at that today. Risk management, position sizing and stocks. We'll probably get to that in the series in due course in the future. Take profits. That's one that is super hard. It's one of the hardest ones. Wax, you say you're good at buying. Did you say you're also good at selling, or was that a
well, by selling I actually mean trading. So I swap my tokens when they're at a peak for another token, which is more stable. So It's not necessarily selling.
Yeah, so you're not cashing out back into fiat or dollars necessarily, but
I'm not taking profit necessarily.
You're not necessarily taking profits. Got it. So we're gonna look at that. And then how many eggs in one basket? That's the idea of diversification. If you put 100% of your crypto into Luna in the past, if you've had your 100% of your crypto in that one basket, then you've lost something like almost all of it at this point. No, it might recover. It might recover. Who knows? We can hope and pray. But at this point, it's you got to appreciate that diversification, even though the crypto markets do tend to move in conjunction, as we can see, there's so much red at the moment because there's a contagion in the market. But still diversification is sensible. So that's the question. The principle there is how many eggs in one basket. So that's the list of principles we got to kind of bounce off from. We may well end up with 15 by the end of as we progress with the series, but that's the starting point. So any questions, any comments, Waxer? Otherwise, let's now jump into focusing on some charts.
Just quickly, so do the same chart analysis principles that we're going to go through apply to the shorter time frames as well as the longer time frames?
Fantastic question. Equally. Yes, they do. So technical analysts will certainly say yes, they do. The trouble really is about liquidity, but yeah, the answer is yes. We can do the same kind of analysis on the 3-minute time frame. It's just that it's more of a gamble. Like I said, there's less reliability of the direction on a 3-minute than a 3-day chart. But
because of the less data.
Because there's because I don't know how to describe that. There's less data. I mean, we can still get lots of data, right? So if I scroll out, this is a 3-minute chart. And if I just do a little box, if I box that up, right, that's all the same data that we can see by looking at a 3-day chart. It didn't keep my box. Oh yeah, there it is. So if I zoom in, that data is there because it still captured that downdraft of the market. So the data's there. You're just looking at the same data at a different perspective. It's just less reliable to judge the direction. But yes, we still use the same tools. We still use the same support and resistance levels and the same momentum indicators and all of these things at any time frame.
Great.
Let me just delete that box there. Okay, so look, we'll start off with these brief comments about Luna and UST. This is what's brought the market down so heavily in the past couple of days. And then we'll get a bigger perspective on where the market's going, why this was actually on the cards anyway, regardless of what actually triggers a contagion. The market was still heading downwards for a while, and it needed this to reset the market, and we'll try and touch on some of that. So Luna, my super quick version of the story is that Terra is the blockchain, Luna is the coin, and UST was their algorithmically stabilized stable coin, which depends on liquidity from Luna token. And so along comes a big whale trader who decides to capitalize on the weakness, the liquidity of the market, by selling a hell of a lot of Bitcoin for was it UST or Luna, Wax? So you just read that. UST.
285 million.
Right. So big chunk of change, and that forced, if we go over to the UST thing chart, that forced downwards pressure because they're selling BTC for UST and it can't maintain the peg. And then we got the contagion. So UST should be all the way up here, and pretty much UST as a stable coin, it should almost not move. It can fluctuate a few cents, but it should definitely not do that. And that's what's brought the whole market down. Let's go over to Bitcoin and actually see that it fits in with the bigger picture. And now we can start to look at more comprehensive strategy. I'm going to talk about the Wall Street cheat sheet and Wyckoff methodology. I need to speed up at some point, and I also need to slow down at some points because I've got to get my thinking and my ducks lined up in a row in my thinking. So you will have to bear with me some of this, but it's not just a quick technical analysis hype video. We are going to go deep, and you are going to learn what real traders have to consider. So here we've got the beautiful Bitcoin chart. I'm going to use 2 charts. I started drawing on one of them. We can do some simple support levels, right? So Waxer, as a newbie, you might well be familiar with the concept of support and resistance levels, and we're just going to draw those in.
Yeah.
We got okay, and then the market went up, right? Bitcoin 65,000. We all know the story. Touched that level, and so I'm just going to draw a line from there, and we can see that it went above. And this is very significant in the strategy that I'm going to talk about, which is the Wyckoff methodology. So I can just draw that, and that's called an upthrust or a sign of strength in Wyckoff methodology. And then we're also going to talk about what's exactly happening today, right? Very, very significant in Wyckoff methodology. And I'm going to show you a few diagrams found on Google, which you can find in images and see how this fits in with the current situation. And it starts to give us a perspective of that this is not necessarily as bad as it seems. In fact, this might be the best thing that had to happen for Bitcoin in order to pull a reversal and start to go up, and we're going to show exactly what's going on. Wax, any comments, questions? Otherwise, I'll just roll on from here.
roll on.
So we are going to go, if you're advanced, then at times I'm going to go into like really simple things like explaining candlesticks. If you're beginner, then bear with us as we go through the more advanced stuff, and the puzzle will start to piece together, but it does take time and patience. So you've got to be along for the ride here, as some things will just not make sense yet. But basically, we can see price going up and down, right? And as Waxer said at the beginning, he's good at buying when it's low, and he's good at selling or at least swapping for another token when it goes up. So, so if we look down now, we're zooming into this candle structure, and we can see this level, this support level that I just drew, touching. And there's a little bit of, so first of all, a support level is not really a line, it's a zone or an area. So we could draw, where's the box with a rectangle? We could actually draw that. It's more sophisticated, and we can capture right at the bottom of the wicks, and we can go squeeze up to the edge of some of the candle bodies, and that gives us an actual range, right? The support zone or the resistance zone is not just a straight line, which is unfortunately what most people think. So if we extend that out, keep that going to today's situation, and let's just see if there's a bit of confirmation of that zone here. So that touches there right on that line. This one is right on the top of that zone, and this one came down to the bottom of that zone. So the market is feeling out where the trading zone of supply and demand. In actual fact, support and resistance levels, they're really better understood as areas of supply and demand. So what does supply mean? It means the market is supplying liquidity, so they're selling. And we can see that, say, here, this red candle of supply, and again here's a significant candle of supply. Really, it's not the length of the candle, but it's actually needs to be tied to volume. So this was not necessarily super high volume compared to the rest of the volume, fairly within the bounds, but it does show that there wasn't much buying interest. Like if we look at this previous candle, when we got right up to that peak, the volume wasn't super high itself. So volume definitely tells a story, and you cannot just do technical analysis by looking at the price without also considering, well, what is the volume also telling us? It adds a lot of perspective. If we look right now, what's happening, right? And now if I just squeeze up the price chart there, we can see that this is a huge amount of volume that's coming into the market, lots of buying and selling. But look, the price hasn't moved much in comparison, right? We can find candles like this green one here, that volume bar is pretty small. So the price can move a lot. What's happening here is the candle's small, but there's a lot of volume. It means there's a lot of trading activity, and the bulls and the bears are battling it out, right? There's a lot of people buying, and there's a lot of people selling. So with the Wyckoff theory, if this is what I'm going to show you that it might be, which is called a spring, then this might be a turn of the market. This might be a bottom formation. I would be much happier to see this above this line, but it's still within the zone, right? As we've defined, like there's the bottom of that zone. So the price, that's interesting. So this candle, this down, which was yesterday, each one of these candles, I've got the daily time frame. So each candle is a day. The wick, the price traveled all the way down right to that bottom of that zone, 27,648, which happened to be the bottom where it touched all the way back over here, which was 4th of January 21, right? 4th of January 21, touched that point. And it doesn't mean anything in itself, but again, it's painting the picture of where the market has interest in supply and demand. So we're jumping back again. And each candle has many candles patterns have names, and I'm probably going to forget what this is called exactly, but it might be called a hammer. So the hammer, I don't think it's a hanging man. It might be a hanging man. I think a hanging man is if it's right at the top, or it's a hammer if it's at the bottom of a trend reversal. So you've got a long wick, and that what that means is during the course of the day. And so if we drop down our time frame, so we look at the 1 hour. It's a bit messy. Let's look at, here you go. If we look at a 4 hour, the trading activity, well, I guess we need to, let's even drop down to a 15-minute. So the trading over the past day, today's candle, or was that yesterday's? No, yeah, that one's today. It dropped all the way down there, and then it dropped all the way down to that level. And then by the end of the hour, this was a nice reversal candle pattern right there. A white cover cloud, something like that is what that's called, where this green one went down, but it came up and it covered above the beginning of the red candle, the down hour. So that's a nice reversal. The markets, the bulls won that battle and momentum pushed up. And so we're seeing all of this activity averaged out on the day candle, if we look at the 4 hour. So during a 4 hour period, traveled all the way down and went back up. So the bulls won the battle, right? That's the principle. And then if we look at the 1 day perspective, now all of that data for the past, since midnight UTC time, all of that activity is here. What I want to see is that this closes not only above the line, but even up here into the green. So this candle becomes green with a nice long wick showing the market was pessimistic. Intraday trading went all the way down and closes all the way back up. If that's the case, if this closes above something like 29,000-ish, right now we're trading at 28,000-ish. So if the bulls get it and we close up here, then that might signify this is a nice clear reversal candle within that trading zone of support. And it would actually signify what's called a spring in Wyckoff theory. So let's move on. That's like a little introduction, bit of beginner stuff, bit of intermediate stuff. Let's look at the fun stuff. So this is called the Wall Street cheat sheet, and then we go on to Wyckoff schematics. So if you're advanced, stick around for that bit. This is
I haven't seen the extended version.
Yeah,
I've only seen the one on the left.
Yeah, before we do the funny one, painfully funny. This is the normal one. So this is how the market tends to move. This is a generic approximation of general market trends. So we get a big drop in the market, and then we get the big rally. So as the rally is going up, optimism turns to belief, turns to thrill, and then euphoria. And when the market's in euphoria, more and more people are buying at higher and higher prices. And guess what? The wolves are doing. The wolves are selling as the newbies and the euphoric people who believe this stuff could never have come down. The wolves are selling to the sheep, right? There's always buyers and sellers in the market. So the wolves know that once they've sold all of their supply, right? That word again, supply, that there's no gas left in the tank of the market. The retail investors are going to run out of their paycheck at the end of their month to keep buying their extra bit of crypto, and so then the market drops, and then the retail market is selling here and here. Complacency. I just need to call it with I don't know what that says, but it starts to drop and there's complacency. So they say it's going to be okay. It's going to recover. It's only a few percent down, and then it drops further. And so then there's anxiety. Then there's denial, right? Then there's panic, and then there's anger, and then there's depression. And that might be where we are today with the situation with UST and Luna causing a contagion across the board. All the cryptos are down. This is disgusting. 30% down on Wax in a single day. Does Wax deserve it? The fundamentals of it's the biggest, it's the most used blockchain with the most transactions and incredible developments. Some that is public, some that we know through Helios. Just amazing developments. Does it deserve to be down 32%? Of course not. But it is, and that's the reality. And so we have to trade the charts according to the realities of weaknesses in momentum, which is another big theme that we keep coming back to, momentum. And then we start to find bottoms. So if I go back to the Wall Street cheat sheet, so we might be here, which is a good thing. It's not a bad thing because the market can only go down for so long. And then what's called in Wyckoff theory, the composite man or the composite operator is the collective accumulated participants in the market, all imagined as one player that you're trading against. You are trading against one very strong market operator, a composite man. So where do the institutions buy? If the institutions sell at the top to the retail investors, it's the institutions that start buying at the bottoms, reaccumulation. So if we go over here, and this is the theory, that the idea with this spring. So in Wyckoff theory, this zone that I've just created is called the ice floor, and it's icy. And if we break through the ice floor, which we have done, then there's a couple of possibilities, and I'm actually going to jump to showing those if I find my chart here. So if I can zoom in here, and we're going to get back to all of these points in this session and the future. But for now, if this is a distribution schematic, if composite man, the savvy traders and the institutions, if they're unloading themselves of crypto, of Bitcoin, because they intend to allow the market to deflate itself to an even lower price level, which might be $10,000 a Bitcoin or 20,000, then this breaking the ice floor is considered an SOW, a sign of weakness, right? If the composite man is engineering this to accumulate, and so the schematic is actually a reaccumulation, then it's not a. I'm trying to zoom in here. I'm having a bit of a hard time with that. Does that work? Oops.
There.
Can you see that? Hopefully you can see that. So then we've broken the ice floor, and then so therefore, if this is a reaccumulation for a continuation up to the upside, then this is a spring. So break the ice floor, it's a spring. And what I'm looking for to help tell the difference, we don't know what the difference is because I'm not composite man, but I can read the what the pattern suggests, right? So if this closes strong as a green candle, a little bit up, hopefully above 29,000 by the end of today, then that might that gives me a lot more confidence that this is indeed a spring. If the price drops further and ends like a red candle, and maybe the wick is not as long and like nice long legs right now, but maybe that price is going to come down. So the body is bigger and the legs are shorter, maybe 27,000 by the end of today, especially if the body of the candle closes below yesterday's wick, right? Then it still could be a spring, and it could be composite man pulling in unsophisticated traders who are there trying to trade on a 3-minute chart or a 15-minute chart, and the volatility is just taking everyone's lunch. They're the sheeps, they're buying and selling and the chart moves around so quickly that they can't keep up with it and they're losing money. This is what the majority of traders get stuck in the trap of trading on low time frames. Even 1 hour time frame, it's a low time frame. 4 hour time frame, if you don't have the context and the perspective of the higher time frames, and we're going to end up looking at a weekly time frame. Look at that. Tell me that you want to be buying when strong and trading like this fluctuates. If we imagine this is the zone we're trading in right now, if we jump back to the 3-minute chart, right, look at how thick this zone is. It's huge from the 3-minute perspective. It's got all the way down here and all the way up here. But if we jump up to the 1 week perspective, that zone is relatively, it's a lot smaller compared to all of what happens over the past month. So the unsophisticated traders and some sophisticated traders, they do know how to trade within like very small time frames, and they have to pay attention all day long, and they've been trading for years and years, and they don't have much of a life unless they're super successful. Maybe they can get to the family barbecue in their big mansion, but they are basically stuck in front of their 6 monitors to do intraday trading. And if you're not doing that, and we get to personality types is part of this, it might not suit you. You might not have the patience or the time, certainly not the skill if you haven't been trading for a hell of a long time. Then you got just massive risk by trading on a smaller time frame, even down to a 4 hour time frame. This is also fairly tricky, but it can be very useful when you combine it with the perspective of the higher time frames, like the weekly or 2 weekly, etc. So here we can see momentum is bad. This does not look good. This looks heavy. And this is back to my analogy with this thing. You can imagine like this is a yacht. Okay, it's a nice yacht, probably cost a few mil, but then think of a mega yacht, or think of an oil tanker, and think of the effort that it takes to change the momentum of the market. It's not an easy thing to change the direction of an oil tanker. It takes time and a lot of fuel, and well, really the key there is time. So here we've got a big downdraft over the past couple of months, and that's why I'm saying that even though the UST, the lunar contagion, looks like so brutal, we were already down here somewhere with the market, right? We were already suffering. And would this have broken? I believe that we would have broken this the ice floor, because my hunch is that this is a reaccumulation by composite man, by the institutions and the savvy traders. So we were going to get hit anyway, and they just use some excuse to accelerate the contagion and make sure that it's deep and painful for everyone, because they are wolves and the rest of the market are treated like sheep. Okay, so jump in, Wax, if you got a bit on a bit of a rambling roll here. So, but feel free to jump if there's something specific. So
that's brilliant. There is something specific. So I'd quite like to look at the two Wyckoff graphs and the difference between the what would be a spring and what would not be, because it's quite subtle at that point.
Yes, fantastic question. The answer is that composite man does not want you to know. Only composite man really wants to know what it is doing. So that's why it is. So with Wyckoff theory, I think the response is that you only know what something is once you enter the next phase, right? So we'll only know if this is a spring or if it's a sign of weakness once this occurs, unfortunately. Okay, so this says a phase C for distribution is what's called the upthrust. I can't remember what AD stands for, but that's an upthrust. This is like an upthrust here. So just to try and define some of this, buying climax is this point, and automatic reaction, and then this is a secondary test. This is a sign of weakness. Then you get an upthrust. Then you get another upthrust. I can't remember what the AD is. Then you get last point of supply, another last point of supply, sign of weakness, and then phase E is the actual market move. All of this is like in a range consolidating. If we jump over to the reaccumulation, we've got a similar thing. In our case, Bitcoin went up from 30,000 and entered a trading zone. So it doesn't matter too much which direction. You can find diagrams that show you from both perspectives. So this was the end of a bear market. We actually had the end of a bull market. So we've got so these points are some of them here are upside down. So we had our buying cloud. In fact, let me just jump to the other chart I've got. Still responding to your question, Wax. So how do you know which phase we're in, or if it's a spring or a sign of weakness? So let's just move that to the side. So here's our Bitcoin chart, and we went nicely up into the buying climax, which was in April of 21. Then we came down to our automatic reaction, which we might argue is there as the automatic reaction. And that came down to set the tone for a very clear demand zone. So the demand is that the marketplace, maybe the composite man, the institutions, the savvy traders, and the retail investors who do their basic support level technical analysis decided, look, there is a support level here. We're over here, so we're going to be buying. But then the retail people start to buy, and look what happens. The market went down again to retest these areas, fair enough. And then we went up again, trended up to that secondary test zone. And this was an up thrust because we went above, if we're thinking in terms of the very specific lines. So I zoom in here again, we've got a line just there, right? Mm-hmm. That the day of 14th of April, isn't that tax day in the US? Or is it the day after? Or isn't that around tax day? Not sure.
April 5th UK.
We're both British. So, so then we retested here, and unfortunately, this is what happens, right? A lot of people will see that we've broken above the resistance. Amazing, we've broken resistance. Bitcoin to the moon. And they don't know the Wyckoff theory or the composite man methods used by the trading houses. And even though we broke above, supply came into here. This is a supply bar or supply candle. And then here was another supply. And we've got to kind of confirm with so that was quite a lot of volume, but not really out of place. This was a lot of volume, this one here, and that relates to this one here. So quite a lot of volume there. Bulls and bears fighting out. You got wick on the top, wick on the bottom. So quite a broad trading range, trying to settle somewhere in the middle and deciding who has. So what Composite Man will be doing is oftentimes looking for the strength of the retail market. If the retail market is not buying, then the institutions aren't going to buy because they've already bought. They want to sell and make profit. So if there's no retail interest and there's weak demand there, and by testing supply, then they're going to start to unravel and unload, and then there's more supply, and they'll play games, right? Composite Man can hold prices short term and then sell into the interest of, like, when you break the market here, a lot of buyers would come in retail market because they think we've broken resistance and we're going to the moon. So you get some a bit of choppy market movement. And then the institutions keep selling, and then at some point they've sold most of their big bags, and now they've got nothing left, and retail market is left, oh shit, we're not going up. This turned into resistance. And now the retail market starts to sell, and we get the downdraft. So that's the concept of the up thrust or the secondary test of the buying climax level. All right. So we come all the way down, and looky here. One of the things that we do use is the concept of lower lows and higher highs. So we had this was a low over here. This was a low, and it went up, and it went down, and this low was higher than this low. So that's a positive direction of the market. And a lot of retail investors, a lot of technical analysts will say that's a bullish sign for the market. And me too. I look at this, and that is because until we've seen the subsequent phases, we don't exactly know. We're in a bit of no man's land, even though the price can tell a lot of story. And we'll come back to that principle as well. There are times when we should not be trading because the market has not decided what direction it is. Again, educational purposes only, not trading advice. You make your own decisions. You're responsible. You build your own strategy. But again, I'm just kind of rambling some reflections of my personal perspective. So here we had a low and a low. And then we went up again, and we came back, and we had a higher low. So that was good. From you get it? Maybe I'll change the color of my pen here. So we got a low over here, and then the next, yes, we had this, and this was a lower low than this, but that's the rationalization we make. So there was a low and there was a low. So we're thinking, okay, from here to here to here, we're building some positive momentum. And it was true for a short-term trade, and it did go up. But Composite Man says, "Hey, hell no, we're not done yet. We haven't accumulated our big bags again yet. So whether it's retail, just like again, a lot of traders over here will see that we broke through this." If you're looking at a short time frame, even a 1 day, you're thinking, wow, this looks great. We've broken above resistance, right? We fell down and we couldn't get back up. We fell down and we couldn't get above this level. We fell down. This was a nice trading range over here, right? And we broke out. But look, it's the same concept as up here. This is an up thrust. So there is a bit of a fractal nature to these things, and that's why the multiple time frames work and etc. But you've got to, if you're doing a lower time frame, you've got to be sitting there all day long, and really, partly is luck, because again, coming back to this principle that if you're on a jet ski, not even the person on the jet ski knows exactly what the waves are going to do to bounce him around, and unfortunately. The Composite Man is on bigger and bigger boats, and the waves that the big oil tankers make, the jet ski is going to get bashed around by the waves that are being made by the big oil tankers, right? Again,
so over the next say 3 days, what will determine whether we're going to go through the ice floor or potentially
the ice floor? Yeah, so the ice floor. So okay, so good. It's a case of waiting and seeing, literally. If this turns into a green candle above, and if it doesn't, then maybe it'll happen tomorrow, because Composite Man may be, a lot of people will be selling their Bitcoin as the market structure breaks that support level and it starts to go down. People will be panicking or protecting their risk, etc., and there'll be a lot of selling. So the market man, Composite Man, is watching for how much weakness is there in the market. If there's a lot of weakness and they haven't finished buying enough of what they want to accumulate, then they will allow the market to drop even further. And we don't know until it happens. We don't know if this is a sign of strength or a spring or a sign of weakness. So over the next couple of days, we might see that this recovers. It might take a couple of days for the market Composite Man to accumulate the bags of Bitcoin and crypto that they want. And then we do get back above. It can't take more than a few days, though. If it takes more than a few days, then it's not really much of a spring, and there's still high risk potential that we can see just turn over and do another leg down.
So looking at the chart before, it looked like both options of the Wyckoff chart over the next 2 days, they go above. So that one goes above the current trend, the current support band, and then it comes down, retests it, and at that
Yeah.
point on the other chart, it goes below it and breaks through it.
Yeah, so
So
it's a lot.
I guess when that happens,
Yeah, so it's that exactly. So it's that opposite thing. So okay, so let's draw the future of the possible Bitcoin price here. So if we use Ghost Protocol, and if this is a spring, so we can see a little rally up to some level of resistance, which is in this area for new supply, and then it's going to come down and do a test again of this support level. Then it can go up, maybe it'll go up to this green, you see I got this green dotted line, trend line, more or less.
oh yeah,
If I there,
just see it.
so there's the green line going down there, and chances are we can go and retest that level. So oops, boom, retest, maybe up to again another strong level, which might be here. We get to about there, and then there's another little retest, and then we're going to get to here, which is that trend line resistance, and then we might track down that for a little bit, and then we break out. This is just theoretical, right? We don't know, but this is the general concept of the patterns. And so Wyckoff theory will say, okay, so we're going to get up here somewhere. There's going to be a last point of supply. A last test, a big test. So there'll be a bigger drop. Then we get all the way up to this line, and there's going to be some risk and concern and profit taking and hedging and taking money off the table. So this can do a little bit of a funny thing. And then market breaks through, and that will be a sign of strength again. And then oftentimes in Wyckoff theory, it's called a backing up action. That's where the market will come down to test the zone of support. And that's the end of phase D. And then we're off to the races in the markup phase of phase E, once Composite Man has accumulated what it wants. So best case scenario is something along these lines. And in Wyckoff theory, there's something called crossing the creek. And we can draw, I drew it like an S. So it's something like that. A nice hot pink crossing the creek. And that's where you know that you're in phase D. So phase D is more or less that, where you cross the creek, which is kind of, think of it as covering the spring event, which is in phase C. Phase D is then the last point of supply. Sometimes this can be a bit shallow, actually. This can be a bit more extended. So anyway, so let's go over and look at the diagrams. Here, so we've got the spring, we've got the test, we've got the last point of supply. We've got the sign of strength, backing up action, again, the last point of supply, and then that's phase D, and then phase E is your next leg up. So this is what I'm looking for. This is what currently is my theory of what's happening in the marketplace. I am just as open to being wrong, and this is going to create a downdraft, especially if we go back to the charts and look at the likes of, so UST has been a big story, but now it looks like there might be even a contagion on USDT, which is another stable coin, USDT. Because looking at it right now, this has just yesterday, it dropped 1%, and today it's taken a long wick down to 95 cents per USDT. And I'm not sure that's ever happened before. But there's certainly pressure, it looks, on USDT. And if that happens, if USDT fails, then boy, Bitcoin at $3,000 could be on the cards. And you bet that the financial institutions are figuring out the best way to profit from it as Composite Man. So So for now, I'm of the expectation that if we see a sign of strength and we go back up here, then this is the kind of thing that we're going to be doing. And we also don't know how long these things take. I've drawn it, but it can be extended. It can certainly take longer. There's no real time limit for how long these phases of the Wyckoff schematics can take, right?
Yeah. Would you like to draw the alternative? Or should we move on?
So the let's have a look. Distribution. So I got to move the words around a bit, and so
we're in phase D at the moment on that.
Yeah, wait, if it's distribution from up, so that's the same. So we would be, phase, if it is a sign of weakness, then it's actually phase D, and we're just looking for a breakdown. So what would that breakdown look like? Again, this 1 day candle closing below that support. Maybe I can kind of draw. Let's just get rid of the volume signature. So today's candle could close below yesterday's wick, which would be something like $27,500 Bitcoin. If that happens, then tomorrow. So let's jump now down to a 4 hour. Starts to tell more of a story. Well, let's look at a 1 hour. 4 hours good. So where's my pen? Here, let's do. So we're like, again, you can't be too specific because the market has volatility, unpredictable on the short time frame, but it's going to do something and then it just starts to trail off. So it goes to retest some of these candles and it's just a general breakdown and then
a free fall.
And then at some point, again, just a free fall. And we don't know how long that can take. It can take, I would expect if it's a sign of weakness for a distribution, then it will probably hover here for a little bit more time. It could even fake it and come back out here and down because because retail people will be buying from the institutions who are selling. And so the sellers are offloading and they'll allow some positive signals to be taking place, but because they have the more money, the more liquidity that's how they can basically control parts of the market temporarily.
So if it does drop down, what's the next line of resistance below this point?
Very good. Thanks for keeping me moving here, Waxer. So let's, that is a messy chart. Let's get to a chart. And then it's easier when you want to look back really extensively. It's good to use a higher time frame because there's just less lines to try and think about, and you can see things more clearly, right? So let's. Funnily enough, the markets tend to like round numbers for some reason. So Luna was eyeing up $100 in the past days, and now it seems to be breaking down below $1 or even 10 cents. But so basically we're looking for previous levels and we're looking for round numbers. So what would that be over there? That's 20,000 and it's the previous, it's a previous high, right? So, and if you look at it from that perspective, again, if you can kind of get a sense of the momentum in the market, there's nothing to say that we couldn't have another one of these big bad red candles, which is a monthly time frame. Each one of these candles is a month. We could easily have the expectation that could drop another ugly red candle down for a month, and then we're at 20,000. If that breaks, then where do we go? What's that level there is, all right, not a round number, but it's 14,000. And if we get down to 14,000, There's nothing. I mean, if it breaks 14,000, then where might we see another good support level? I feel like something like that looks about right, which is 6,000, which is a round number, 6,000. Because you got a big, after it went above there, you had a big rally up. So that's interesting. Came down and kind of toyed with that level for quite a long time. Then November 18, there's a big drop, big supply capitulation in the market, few months of reaccumulation, and then it came down to this level again. So yeah, we can, and then that wick closed above, and then we started so that was like a spring, right? That month candle there, kind of, you could call it a spring. We could go down to the lower levels, weekly time frame, have a look what's happening there. So that was quite an ugly candle, and it closed well below that support level. So it took 3 weeks until we got back above there. So that might even be what can happen in the current market. It can take longer than just a few days to build that strength, and then it confirmed that support, and then it was up.
So I think that was COVID. I think that red candle was the start of COVID, which caused that spike. The one.
Oh yeah, March 2020. Yes, indeed. February 2020, when the insiders found out about COVID, and then March when it became hot topic on the news, collapsed the economy, and then that downdraft there. But look at that quick recovery. So here's the point. The real point is what we're going through now has happened 1,000 times before in Bitcoin. Look over here. We can even go there. It's like fractals, right? So this one is Bitcoin went from $10 up to $260, and then it died and went down to $65. And we can use that one. We can use this profit thing, and it dropped 74%. And then it went up. And then after it went up, it went down again. And let's see. It went down 85%. And then it went up crazy again. And then it dropped from there down 83%. And then now we're at the situation we're at pretty much. And
so what percent are we on?
We're currently down from that up thrust. We are at 61%, 62%, 63%.
And what would be the 80%? What support line would that reach if it went to 80% down again? If it was following that trend?
So if we got an 85er, that would 85 on the dot would take us to about 10,300. So within that range, below the 14,000. Oh no, that was less. Yeah, 10,000. Pretty much 10,000.
And we're seeing these cycles because of the halving of Bitcoin.
Right? Say that again.
We're seeing the cycles because of the halving of Bitcoin.
Yeah.
It's twice as difficult to mine.
Yeah, big part of the theory of what moves the markets is the halving process. So my point here is, if you're stuck in this downdraft, then don't despair. You've got to decide if you need to hedge versus lower loss because you need the cash flow. People are going to have a belief whether the crypto industry is here to stay and continue and grow or not. If it is, then it's only a case of time until the value of your tokens, providing you're following that principle of not putting all your eggs in one basket, right? Do diversify is my suggestion. My approach is to diversify. My trouble is that I've diversified too much, and it becomes overwhelming to juggle all of the different tokens that I've got bags of. And we can go into that kind of stuff in future calls. But I feel like this was a pretty good intro to some perspective. Maybe let's have a little look at a few other now we've understood some of market structure. We look at today's current situation. Hopefully this is going to close in the next few hours at the end of the UTC, midnight UTC. We're going to see that candle and we're going to see this become a spring. I would love to be able to do another follow-up video in the next days to show that, yes, we're building strength. That does look like a spring because we've re-entered here. It looks like we are crossing the creek, right? Again, something like that. If we can cross the creek, then it starts to not look like a distribution scheme, because distribution schemes have that sign of weakness and they don't go up here and cross the creek, right?
Yeah.
So if it falters, then we might be in distribution. So we might know. I mean, I can leave this line on the chart here and we'll see where we are. Well, that's still a couple of weeks away. So we can probably do stuff in the interim, and we'll pay attention. But let's look at a few scary crypto charts. And within our ecosystem, EOS.IO protocol, we can look at quickly Telos, Wax, Proton, and EOS. And again, they're all down, but so is the rest of the market, just to be clear. So there's nothing exceptional about these tokens being down at the moment. So if we just zoom out to a weekly perspective, and this is the kind of level that you might see a lot of technical analysis, YouTube type stuff, and they're just basically painting some basic support and resistance levels. And there's nothing wrong with that, but it's only the beginning of the conversation you need to have, the analysis, not really enough to go by. And I know TA people are looking at projects and coins and kind of generally looking at strengths. So no great criticism, but you or us as retail traders, we certainly need to develop much more of a sophisticated approach, and that's what I want to encourage. If you think that you want to trade in and out, then be very wary of what you see on YouTube, including this video. Go do your own research. DYOR. Principle number 2 is that is responsibility to do your own research, build your own strategy, but just don't make it out of thin air. Invest the time that you need. So Telos is not looking good, obviously, because we've broken that support level. If we draw that here, and there was that at the beginning of KuCoins, following this was only May 2021. Maybe there's other exchanges that have more data because they listed the token earlier, I'm not sure. But just looking at this for the time being, we had an amazing rally in Telos, amazing progress, and this was the start of the downfall of the market in general. So at the moment, Telos is in the tank along with the rest of the market. How long it stays below there is another question. So this is a one-day chart. We had a very bad day yesterday for Telos, and today it's like this. I think of it like a spinning top. I think even in candlestick patterns, it might actually be called. It's a long time since I learned the names of these things, but it might be a spinning top. What that shows us is that there's a lot of bulls. Where's my rectangle? There it is. There's a lot of bulls that are pushing the price up, but then there's also a lot of bears pushing the price down, and the price is somewhere in the middle. So that is suggestive of a potential reversal, meaning momentum is either going to follow through, and oftentimes what you see is a pattern where the strength of that downdraft is equal to the next candle after the market has battled out trying to decide. So if the bears win this, then we could well see a further drop, similar-ish to that, and that's going to be the case if the rest of the market goes down. So it could be that Telos is going to 18 cents, and then we're pretty much down here at this level. right? Does that make sense? So this candle, yesterday's move could be equal to tomorrow's move if the bears win this battle in the middle that they're playing today, right? And so if we get an equal kind of size-ish move as that one yesterday, just eyeballing it with length, then that move tomorrow could take us all the way down to this 20 cents, which looks like an interesting point of demand, of support, because we had a very strong bar back in August 2021, just a few months ago now. Wow, Telos has really moved in half a year. So that might be, then if we see the turning, and we can look at in future sessions, we'll see how we see evidence that the market is turning from momentum. And then that might be like the biggest, best possible buying opportunity for Telos, along with other charts that are in a similar situation, right? We're looking for reversals as the entry points, the demand point. And that's got historical evidence of it being there. We don't know yet what's going on in the market. It might be that if Bitcoin it acts as the spring and closes above that ice floor price, then Telos and Bitcoin and others could very well jump up tomorrow and reverse the negativity of yesterday, and we get a nice big green candle back above this support level, and then that could complete that spring pattern for Telos. So you don't get to buy at 20 cents, you will have to buy at like 45 cents, which is like double. So what's nice is if we do get fast, if you've got gunpowder left, if you've got some money left in your trading account, which is why it's good to learn how to sell. And we will go into that in future sessions. When's a good time to sell? And so that you've got gunpowder so that you can buy on the cheap. And it's the people who buy on the cheap and sell when it's reasonably high, anywhere within this kind of zone, right, would in retrospective would be fantastic to sell. And whatever crypto it is, Telos or whatever else, because you can buy when things are super low. And then look at this. If we were buying Telos at 20 cents per coin and it went back up to its previous high, that's a 600% increase. If we buy Telos, if it gets above, if it acts as a spring, once it will get above this, right? We believe in Telos as a fundamental project, astonishing developments in their ecosystem, on their roadmap, in the partnerships, in the technology, in the funding that's happening, a lot of stuff that's public, some that might not be public. But if the trader buys at, say, 45 cents and it goes up to previous time high, then it's only a 200% gain. So the name of the game is to buy cheap, because then you, instead of the difference that you get by buying at 20 cents, you get 600% gain. If you buy when the market's more cozy up here at 45 cents, then you're going to make 200% profit. So that's another suggestion of don't despair when the markets are down. Don't catch a falling knife is another principle that I should probably add to the list. But when we do see a turn of market, when the market does bottom out, let's go back to our Wall Street cheat sheet. When the market's in depression is the best time to be buying. Buy when there's blood on the streets, as one popular phrase attributed to Nathan Rothschild. Because that's then the start of the next market cycle. So Composite Man is accumulating when everyone else is depressed, because they know that there's going to be a new market cycle beginning, and that's the name of the game at this point in time with the current contagion. Jump in if you want, Wax, or let's look a little bit at Ultra and Wax, and maybe we round off today's session.
Yeah, let's have a look at EOS as well after.
Oh yeah, yes. So what have I got here? Log there. Okay, so this is quite interesting. If you guys got some more patience with me for, I know this is, I'm not quite sure how long we've been going. Wax, how long has
1 hour, 14 minutes. But
Okay.
it's interesting, so it's good.
All right. So people can refer back and stuff. So let's actually do this. Let's because this was previous analysis I did with Ultra. I like Ultra as a project. Ultra is a private blockchain built using the EOS IO protocol. And maybe you got some insight there, Waxer, about partnerships and things for Ultra.
Yeah, so they've recently teamed up with a game title, which is going to be a AAA game. And we had that on our top 5 moments of the week last week. So I'd recommend having a watch of that video. But the game looks fantastic, and I'm sure they've got more partnerships lined up for utility with an expectation in the game market, which traditional users from Web 2 or normal gamers have when it comes to playing games. So it'll be amazing to see a AAA title on blockchain.
Very cool. Very cool. Okay, so this is worth mentioning as an introduction to this concept on this call is channels. So we can draw support and resistance, and we can draw trend lines, which is going up or down. But often you want to draw what's called a channel. So I got my channel tool, and this is TradingView. If you don't know it, there's different sizes of accounts, and you can have a freebie account, and got a lot of awesome charting tools. Most people use it for stock market and crypto industry. And so this tool, to create a channel, let me get rid of that again. I'm just connecting this low point, and I'm drawing up what looks like a good trend line. And a trend line doesn't necessarily touch every single point, but it's like a zone, and it's a point of best fit. What seems to tell the best narrative. So I've got it there. Hopefully you can see that narrow purple line going up on my screen. I'm going to click, and then I drag, and then I want to try and find the parallel trend line. So I think it's about there. And if I pull that one down a bit, so I can connect it with that one as well. So now we have a channel, right? Price was introduced to KuCoin on September 2020, and price dropped to 82 cents from, 30 cents to 8 cents. And then price went up, and you can see it touched the middle of the channel here, which is kind of interesting as well. So then it dropped back down again, then it went up, and then it went through the middle channel, and it went all the way up here, and then it dropped down. So when you've got a few points, 1, 2, and really there's a third one there as well, then you can kind of draw the trend line. And we can also see here there's a little collection pattern here, collection pattern here. Yes, we broke down below this, but if we zoom in, we can see that we actually touched it right there again, and it battled here. There's a wick there, but it did. And again, these are not lines, they're zones. This is a little bit far off from there, but it's within the vicinity of the bottom of the channel. This again is on the bottom of the channel, playing around here. And so, and then it went up to here again. So that's an interesting trading channel. Unfortunately, what's happened is that we've now broken clearly out of the channel. We broke down. There was a nice rally to attempt to get back to the channel, but it didn't quite make it. And the market has fallen over, Ultra token along with the rest of the market, down. So now we're looking for that bottom again. We've also got our support levels. It might come down to 20 cents or so, or it will bounce on the strength of Bitcoin and the rest of the market, pulling it back up above here. Now, the point with channels is you can trade within a channel for as long as it adheres to the channel. So this could be, I'm going to change color pen. Where's my color? Lost my color. Never mind. You could, if you can detect a channel, you might decide that this is a good buy zone, right? Or this is a good buy zone. And you might also decide to take profits if you start to see this emerge. You might, if you've got kind of mix of lucky and savvy and you're really paying attention, maybe you saw this and you thought, this is now the top of this channel. I'm actually going to take some profit off the table, especially when you start to see this supply bars show up. So you could be selling here because, well, it's hit the top of the channel and it might want to come back down to test the bottom of the channel. And then you might have bought again here when price got to the bottom of the channel and did a reversal and started to go back up again. So you re-enter the market. And then obviously the theory broke down. So what sometimes happens is that price can recover, and even if it breaks down, it can go back up into the same channel that it was in previously. So that's one trading technique, and you can find a lot of channels on a lot of charts and trade them. Unfortunately, this is so deep that we might have broken this channel completely because of the contagion with Luna and UST, etc. So we might then be looking for a new channel as Ultra bottoms out along with the market, and then we start to see some new direction, new level develop, and then you can start to trade the channel there. All right, so that's a little bit on Ultra. Wax. I did have a channel there on Wax, was working well for many months. Again, we've broken down. What is the potential downside target? Well, I'm going to draw these lines pretty quick, but there it is. All right. So we were there. This is at 8 cent Wax. All right. We got all of that activity at that level. We got that. We got that. We got that, and we're right there now. So optimistically, hopefully, we are going to see this reversal in Bitcoin, and some of that market recovery can happen fast, and price can get back above that next level. Or if the market continues, Bitcoin drops to 10,000, then of course Wax can be dragged down along with it, and we might see Wax at 3 cents. The point here, just again, is whether you spent all your powder on crypto, but in the coming months, if there is a big downdraft, then you'll be able to buy in dollar cost average at much lower prices. And just again, to make that same point, if you buy at 3 cents and we get up to this previous all-time high level, that is a 14,000% gain, right? Again, Wax, in my opinion, not trading advice, not financial advice, in my opinion, Wax is a super solid overall ecosystem and developing strength. Scalability is there. New projects are launching. You'd be lucky if Wax, even if you're holding a bunch of bags of Wax that you bought up here, right when we thought it was going to break out to get to new all-time highs, and it got stuck on the top of the channel. At $1, look at that, it's $1. So those round numbers do show up quite often. So the market took the price to $1, and that happens to be the top of the channel. If you notice that, having watched this episode, this part of this explanation, then you might be looking to take profits in the future with charts that do a similar thing. And then, but even if you bought here, right? Even if it drops to 3 cents, that's a world of pain, I know, but it's only short term, and it's about perspective and attitude. That's a 97% drop, which unfortunately is what the Luna crowd are going through right now. We hope that Luna Terra survives for the sake of investors and for the ecosystem as a whole. If it doesn't, then you know what? There'll be other projects, of course, just opportunity after opportunity within the crypto industry, and you're going to rebuild. So you're going to find the tokens that you can buy for dirt cheap, because sometimes they do drop from $1 down to 3 cents. You buy a big enough bag of wax at 3 cents and wait patiently for it to go up 15,000%, and you're going to be well back in the game with resupplying your crypto account with value, right? So that's the little narrative, the story I can see on wax. It might find support where it is at 8 cents. Scarily might drop to 3 cents, but they're only buying opportunities if you believe in the long-term potential of these platforms as they start to gain real-world market adoption. Speaking of which, EOS, massive fundamental. We haven't really touched on the fundamental analysis, and we can do that in future shows, Wax, and share some of the insights about what's happening in these systems. But EOS is going through a transformation of itself. Well, let's just look at, so on Binance, this is EOS against US dollar, and we can draw a few of the typical lines. Where do I want to draw? I feel like I want to draw one there. Something like there. And then let's just make this a bit of a Wyckofian analysis and say that, okay, so we had a buying climax here, all right, B, C. Then we had an this is a little bit different because we can't really say that this was the automatic reaction, because we actually went down to here. So this is more like the automatic reaction. It was a bit more extended. We went down halfway, then we actually had a secondary test, and then we dropped. Then the market's done its thing. There was a sign of weakness or a secondary test there. Went up quite well. So that was $14 in May of 2021, but it didn't get to that top of that price. Overall, just EOS is unfortunately dragged along for the ride by the rest of the market. Market weakness will result in weakness for all coins, including EOS. And now again, EOS is testing that, from a Wyckofian perspective, that ICE floor.
It looks like almost the upside down Wyckoff graph. Could you pull that up again? The other one? That one. Is it similar to that? No, never mind.
So yeah, it's very difficult. It is difficult to see until it's easier to see retrospectively. So as a trader, you can't rely on predicting the market, even though that's what our brains try and do all day long. What we need to do is respond to the market. So when we see patterns emerge, when we see momentum start to shift, and we'll go through that in the next call, and we'll get a bit deeper with candlestick patterns, then yes, we can start to judge what phase this is, what's the style of thing. And sometimes Wyckofian schematics don't suit a particular market for whatever reason, different reasons, lack of liquidity, all sorts of things. But we can certainly try and theorize based on that stuff. So yeah, if this week would be very nice to see EOS close above $1.50, which is that support level. If it doesn't, then it might be Composite Man pushing us down a little bit more to get EOS bag holders to sell, so that it's 100% for sure. If you go and look at, if you're not familiar with the EOS market, you look at what the innovations are happening this year with the ENF, the foundation, the blue papers, the new infrastructure, the launch of Truth EVM. I would think that
Truth EVM.
I would think that institutional investors would have good excuse, good reason to start filling their bags of EOS tokens, because there's now a lot of activity. And remember, the institutional investors, Composite Man, does not want to buy when it's high, right? They don't want to buy when EOS is back above $10. They want to buy when it's low, when it's like $1 or whatever, something around this zone. That's where they're going to be filling their bags. And they'll allow the price to go down. They're swapping the EOS bag holders. The institutions would be buying, and then price gets above, and so you can have an extended spring, like we saw on whatever chart it was. A spring can often, I think it's Bitcoin, can take the shape of a monthly candle, right? You get a big downdraft, it can take a month. It might take even longer. You can also look at a 2-month candle, a chart, or a 3-month. I do that sometimes. I look at, try and get a perspective, and I'll go through how I think through the different time frames, because there's so many of them. How do you make a decision when there's 10 different time frames to look at? And we'll go through that. But if EOS, if the fundamentals are there, if the ecosystem continues to build, then we're going to bottom out at some point, and the amount of buying interest that will then come into the market from both institutional and then from retail investors is going to be epic. And we can certainly see EOS recovering on that turn to previous levels of $6, and then $20 looks like around about that was the high, and then beyond. So any comments, questions on any of that, Waxer?
No, but we've been going for 1 hour 30 now.
All right.
So if you've got any closing comments.
So I guess I'm going to keep revisiting these principles as we go through and show demonstrations, and we can do updates. We don't have to spend so long on calls, but we can do regular updates, at least for a while, and show what's happening in the market. This is a takeaway. Feel free to take a screenshot of this, print it out, pin it up on your wall, reflect on it, try and internalize what's going on here, and we will continue to edit and refine this over the coming sessions. Bear in mind momentum. It's all about momentum. Do not get stuck on your little jet ski thinking you know what's going on when a big oil tanker is cruising past. Those are going to make waves, and you cannot control the large waves on your jet ski, and you're going to get eaten like a little sheep by the market. So I think that's my rounding concept, and we'll catch you again another time. Over to you, Axel.
Yeah, thank you all for joining us. So we'll be doing another chart analysis video next week, and we are calling that State of Crypto. So stay tuned to our Twitter, and I'll make sure to get an announcement out there as soon as possible. We look forward to seeing you again.
Cheers all.
Thank you.